And welcome to the top of the hour again. Thank you for joining us from all points in the world. My name is Mark Johnston. I'm your host here for the VID5 conference, sponsored by our great friends over at Laurentian Bank Securities. And I want to thank our next guest for a wonderful session to come. We have Duncan MIddlemiss, President and CEO of Wesdome Gold Mines. How are you, sir?
I'm doing excellent. Thanks, Mark, for asking.
Glad to have you here, Duncan. And as always, I'll remind our audience that at the end of each session, we do have a survey. So we welcome your feedback. And certainly we welcome your questions for Duncan about the sector and investment opportunities. So please put your questions into the Q&A column and we'll get to as many as we can. And as always, Duncan, I will gently step to the side, leave you to the presentation and come back in on the other end.
Great. Thanks very much, Mark. Good. Listen, real pleasure to be here presenting on behalf of Wesdome Gold Mines at the VID conference. I'd like to just start off with the title slide here, and I really do think it's really what we're all about. We're becoming Canada's next mid-tier gold producer. We've got a great picture of our newest oncoming asset, the Kiena mine here. You can see just outside of Goldshore, Québec. Kiena mine was an established asset for many years, a producer. We're now in the process of putting it back into production. And that's really crux to our presentation today as to how we are going to get to the next stage for Wesdome. So happy to bring you all along for the journey here. So throughout this presentation, I will be mentioning forward-looking statements, just like you would all expect, I would think, but so far. All right, so really what makes Wesdome tick? I would say definitely it's a number of things. One of them, of course, is Tier 1 jurisdictions. We're very fortunate to be situated in Ontario, where we have our producing asset, producing for the last 25 years, just outside of Wawa, Ontario. And our newly incoming asset, the Kiena operation in Goldshore, Québec. We are definitely blessed with high-grade growth. There's no doubt about it. We've been able to continue the successful exploration of high-grade deposits. So at Eagle River, for example, the reserve grade is 13.4 grams. We've got about 600,000 ounces roughly in reserves. And certainly, I'd say, a good pathway to discovering a lot more in terms of that. Over at Kiena, the current reserves about 600,000 ounces at 11.9 grams. So we are definitely blessed with that. We've got a lot of upside also at Kiena. We can get into that in a second here, but certainly, grade is, we are definitely blessed with that. In terms of our risk profile, it is low risk. There's no doubt. I mean, really, we're in the process of restarting Kiena. The restart is really fully funded. Eagle River has done a great job over the last 5 years of really increasing its production profile, generating cash flow. This has been an organic restart here for us. We've also embarked on a very active exploration program over the past couple of years, I would say. And so certainly, thanks to the folks at Eagle River, definitely helping us out here. And proven management, there's definitely a good trend here. I think a lot of great experience within the Abitibi. The team has really got a lot of, I would say, significant network in around the northwestern Quebec, northeastern Ontario, the Abitibi. And so we definitely lever that into success for us. You can see the relative share price performance. It's been certainly a very good ride since about May 2018. I mean, certainly, I think it was a show me story in many ways. We had to optimize production, got some great exploration results, a lot of encouraging, sort of steps along the way. And we've been able to parlay that into a really good reevaluation. When we look at where the assets are, I mean, we've got the Eagle River mine. As I said, it's been in commercial production since 1996. You can see the 2021 guidance, 92 to 105,000 ounces. We feel quite comfortable with that. All-in sustaining costs in around anywhere from, I'd say, $1,000 to $1,100 US per ounce. You can see the reserves there, of course, 13.4 grams. And combined, measured, indicated, and inferred of almost 300,000 ounces. So it's a narrow vein, high grade shooting mine. Difficult to kind of get a big inventory of resources ahead of it. However, I think we've been successful, and certainly I'll update you further into the presentation on some of the things that we're seeing there. So very encouraging. Over to Kiena. I mean, Kiena, again, it was a great past producing mine right just outside of Val-d'Or. 1.75 million ounces produced at Kiena. I think the remarkable thing about Kiena, it was a 4.5 gram mine. And, all of a sudden our reserve grade is 11.9 grams per ton. So I have to say that there's been a significant stepwise change here in terms of our grade. I have to say we're just getting going here. We're doing a lot of work right now in support of the reopening. We hope to declare commercial production, I would say, in Q2 of 2022. And you can see the profile there. The life mine profile, about 84,000 ounces. We do view the PFS as very base case, I would say. We've had some really significant discoveries since that point in time. So we're definitely going to be embarking on, I would say, enhanced profile over that. You can also see the significant inventory here of measured, indicated, and inferred resources on the Kiena property. Kiena is one of those properties that were sort of held in different hands and just really not been able to have a sort of a significant, cohesive exploration program given to it. So I think we certainly do have a lot of upside when it comes to the exploration here. We look at the corporate structure here. I mean, we've got the 52-week high-low of almost $8 up to 13, over 13. Shares outstanding really hasn't changed. We have not done an equity raise since 2016. So we got about 140 million shares outstanding. You can see the market capitalization in Canadian, 1.6 billion. It's a volatile market right now. Our PNAV is about 0.9 right now, so we do trade significantly above our peers, I believe, for a couple of reasons. Cash position, we've got almost $70 million at the last reported point at the end of the third quarter. We have no long-term debt. We do have a $45 million line ready to go, but it has not been drawn on whatsoever. So really, getting back to the fully funded restart of Kiena, I mean, obviously it's there. We've done a significant amount of work this year, more to do in 2022, but we do not see at any point that we'll have any liquidity issue whatsoever. Analysts, we are well covered on the street. There's no doubt about that. Our shareholding has changed slightly. We're about 70% institutional now, up from about 55%. And 30% retail. Of course, the largest shareholders being Van Eck at the index and T Rowe, both in around 10%. We look at the returns that we've been able to sustain over time. You can see that there's been a large increase in our NAV per share. Our 3-year share performance, of course, is significant. However, over here on the left, you can see, continuing to increase production, also continuing to increase our reserve level. I think that's a very significant achievement for the company. It does certainly give us, optionality to get a better production profile. We personally see, longer term that Eagle River could go up to as high as 125,000 ounces without a mill expansion right now. Kiena, as I said before, is base case. So we definitely see sort of the 200,000 ounce per year mark as being very kind of the low end on what we're able to achieve organically here. Going to the long sections of both mines. So over here on the left side of your screen, the Eagle Mine Complex, what you can see here is a shaft that goes down to 600 meters. There's a ramp that goes from surface all the way down to 1,200 meters below surface now. And what we have there is the different zones in reserves. And so what you can see at Eagle River, the zones are very, I would say, narrow in terms of its horizontal attribute, but they're all seem to be open at depth. So there's certainly, typical Abitibi type structure. It really goes down deep. I'd say the newest thing that we've been able to find, which is significant, is the Falcon Zone. And Falcon Zone is just sitting over here on the west in this sort of blue-green shade. the interesting thing about the Falcon Zone is everything really that was mined for the past 25 years, the majority's all been within the diorite, which is an intrusive. The volcanics, surround the diorite. There's sort of, on our property package, there's at least 10 kilometers of volcanics to the east, 10 kilometers of volcanics to the west. And so all of a sudden we're starting to see mineralization out there, which I think is quite exciting and should be significant. Over to Kiena, we've been able to really find some very high grade material. The Kiena Deep A Zone, of course, is what the PFS has been really structured on. I think the significant thing about Kiena is it seems that around 1,000 meters of depth, things really change over. Above that elevation, I would say that it was more of the the type of mineralization that they would have mined before, lower grade, not visible gold, kind of a large brecciated body. Down below that sort of 1,000 meters, such as the Kiena Deep A Zone, all of a sudden it becomes a very sort of splashy, visible gold in a quartz vein, and so very different from what it's been experienced at Kiena. Kiena's also got a shaft that goes down to 930 meters and a ramp system that goes all the way down to almost 1,200 meters right now. As you can see right here, the A Zone does go down below about 1,700 meters, so there's definitely more ramping to do here. Looking at what we've been able to deliver, I mean, certainly it has been challenging. I mean, the first thing I read off that slide is COVID, and I know we're all getting tired of it, but it does exist. There's been certainly, I'd say, some fracturing of the supply chain also, which has made things a little, a little more difficult, along with the shortage of I'd say technical and skilled labor in mining. It's high demand and low supply, quite frankly. So essentially, we're just coming to this, this point here down to Q4 2021. We've already delivered the PEA. We've already delivered the PFS for Kiena. We've got the go-ahead from the board in order to do this. And so it's ongoing. And like I said, probably Q2 of 2022, Kiena gets up and gets going. And so, look for exploration results upcoming. Look for the year-end production results and 2022 guidance. Really feel quite confident for achieving our guidance. You saw Eagle River was at 92 to 105,000 ounces. We guided the Kiena restart as 15 to 25 in the 2021 calendar year, and we feel good about that also. So Q2 2022 is definitely going to be a commercial production decision. We look at our ESG. I'd like to say that really, I think that, Wesdome always did the right things. However, just probably never reported it, adequately. And now we have a better platform for that. We have a really strong director of sustainability in our camp now. Really good. We've got the sites are performing well. Environmentally, we don't have any issues. Socially, we definitely support the communities in which we work. I think that's important. I mean, we definitely want to give back and make sure that our employees and our communities definitely benefit from our existence here. Governance, we're definitely one of the highest ranked companies in our sector, I would say, for mining and being a junior right now. I definitely think that the governance aspect of what we do is very well regarded. Off to Eagle Mine. So really what we have here is a nice map really of the Mitsubishi Greenstone Belt. So this is very much like the Abitibi. Really a lot of the gold deposits are associated with the Greenstone. And I would say that when I look at this map, it's definitely kind of shows an area that's been late to the party compared to Kirkland Lake, Ontario, or Val-d'Or or Timmins. The most significant discovery here that we're looking at is Hemlo. I mean, Hemlo was really only discovered in 1980. So there wasn't a lot of sort of faith as to having a lot of mineralization here, but obviously I think that's been proven wrong and continues to get proven wrong. So we definitely have I'd say a lot of players in the area also that are up and coming, and so I think it's an exciting place to be actually right now. So what are we doing in order to parlay that into shareholder value for us? Well, we're definitely spending about as much money here as we do at Kiena in terms of our exploration programs, and I think that we've been able to extend mine life, increase reserves. You've seen the growth in even reserve grade over the last little while. So certainly been very good, and we do have great belief in this area and realize how underexplored it really is. So when we look at the actual property package that we have, the one we're concentrating on right now is definitely the Eagle River mine. So as I mentioned before, Eagle River, it's on a lot of volcanics, and the Eagle River mine itself is within that diorite, and so really in existence since 1996 commercially. We have a mill up in the northern part, up by the former Mishi open pit, which is about 850 tons a day, but it is 1,200 tons per day permitted. But depending on the hardness of the rock, that's what we'd be able to put through. So accessible by highway and gravel road. It's about an hour and a half drive from Wawa. It is remote. There's no doubt it's a camp situation, and but certainly a very, I'd say, robust situation for this. So in terms of our long section, we've been through that a little bit, but I'd say that some of the operational improvements. So right now the mine is doing about 650 tons per day. The mill is permitted, it's permitted for 1,200, but it does about 850 tons a day of Eagle because it's hard rock. And so really the short-term goal for us is let's get production up to meet the mill. It's always great to challenge the mill with production. So really what's happening for that, the discovery of the Falcon zone further up in the mine has certainly been beneficial. We've got ventilation improvements happening in order to facilitate, continued production at depth and exploration. And so, 2022, another big year of exploration. We're going to do some significant development in order to really get that platform that we need to have a good look at what's going on here and make sure that we, keep the mine in, production and able to increase our production profile over time. We look at the high grade. We mentioned high grade here before. Well, the 303, we discovered 303 on your right side of the screen. I mean, this chute just keeps going and going and going. It's high grade. It's been really some of the most phenomenal ore that I've seen in my career. It's certainly been good. You can see some of the intercepts here. I mean, 41 grams over 10 meters of core length, 54 grams over 10 meters of core length. So yeah, it's definitely not true width, but certainly, definitely has the grade to back it up. We go over to the Falcon. The Falcon again, and high grade right now. The reserve grade of Falcon's about 20 grams. Nice thing about Falcon is all of a sudden it really opens up the aspect that we could have more Falcon zones within the surrounding volcanics. So all of a sudden, this opens it up to 20 kilometers of exploration. We have a slide on that, and I can detail how that looks. But certainly, there's been a lot of joy with Falcon. It's been a great discovery, and just the possibility of having more Falcon-like zones out in the volcanics is really exciting to us. I mentioned, really what the exploration, picture is, and what you see here in the middle of the screen is the diorite, and this is, in the gold sort of tabular form there. And what we're on here is about a 20-kilometer shear zone, and it's really a series of shears. And really, the shear zones, they're mineralized all throughout there. So there's all sorts of, occurrences of gold out here, whether it's a channel sample or a grab sample or a diamond drill. They really have not been followed up on. So just to remind you, the Falcon zone is just over here. It's proximal to the diorite, just on the west side. And as I said, the shear zone exists, the volcanics exist. The recipe is right for new discovery here. So I think that we're quite excited about that. I think that 2022 again is another year of following up on things. We definitely had a large, I'd say, compilation of the area, which has never really been done, structural analysis in around the mine site to really understand what's going on. And I think that out of that has come some really good targets. And so we're really happy to embark on, continuation of that. Over to Kiena. As I mentioned, we're working hard bringing Kiena into commercial production. I look at this map and boy, it's awe-inspiring how many ounces of gold have been extracted from here and what's left to go. Really, the main features of this really are the Cadillac break, Larder Lake Cadillac break to the south, and you've got the Porcupine Dester to the north there. So certainly, you look at all of the major camps that have been on here and still going strong. And it makes you wonder, what have we missed so far? And so when I look at this, to have, Kiena located probably about 12 kilometers to the west of Val-d'Or, it's great for a number of reasons. One of the, obviously you've got access to manpower, you've got a good supply base there, you've got technical abilities. So it certainly is a great mining camp to be associated with. And Kiena, it's really, just getting going here. So we're looking forward to it. So we are fully permitted. We've got a lot of upside, really good. Obviously, we get the benefit of using the existing shop, existing mill, all which is in very good shape. So we're parlaying that into some pretty good returns. Pre-feasibility study. Pre-feasibility was published at the end of May of 2021. Shows an NPV of about $367 million at $1,600 US an ounce. Annual production about 84,000 ounces. Really, what happens at Kiena is it takes a couple of years to get the ramp far enough down in order to sort of daylight some of these reserves. As I mentioned before, relatively speaking, the pre-feasibility is really a base case. It does not include some of the new discoveries that we've been able to get this year. So all I can see from here, quite frankly, is upside. So we look forward to bringing that in. You can see the life of mine capital, $230 million. That's not all growth capital. Some of that is sustaining. The majority of our build out would be done probably by, I would say, mid 2022. So I think that Kiena at that point would be able to really sustain itself in terms of generating the dollars required to provide the sustaining capex. We look at some of the parameters. Again, base case, you can see the first couple of years of production, 2022, 2023, and around 65 to 70,000 ounces. Really a function of the ramp not being down far enough, and then the next thing, the ramp gets down in 2024. You've got, really 4 good years of production, well over 100,000 ounces. Of course, 2028, relatively short, but we know that is likely not true based on, some of the drilling that we've been able to do over the course of the year. So you can see here, cost, very low cost mine, high grade, after tax NPV and the IRR are pretty awe-inspiring considering the amount of capex to get this going. So what we're looking at here really is the upside. I mentioned that at around 1,000 meters of depth, things seem to change quite a bit at Kiena. This is a depiction really of this zone of transition, and so what we see sort of below 1,000 meters is dramatically different from what we see above 1,000 meters. I'll give you an example of that. The VC1 zone over here, it was much the same as any other zones above 1,000 meters. It was kind of, not a lot of visible gold, sulfidated, retiated, 5 to 7 meters thick, probably in the 4 to 6 gram grade. Down below that sort of that magical 1,000 meter line, the next intercept we get in the same zone is like 36 grams over 6.1 meters. It's visible gold. It's in a quartz vein. It's very A zone like. So there's definitely something dramatic which has gone on here. We do believe it's got to do with proximity to some of the major faults we have on the property, the Marbonite and the Norbenite, namely. So these zones basically get a little bit away from there and they remain a little more intact. So it's certainly good news for us. We look at, I was mentioning, this discovery, which really makes the pre-feasibility study kind of, not just a lot of upside left to it. So we're calling this the footwall zone right now. And so really, we've been able to find a zone parallel to the A zones, probably about 50 meters into the footwall. You see some of the, I love the bottom hole. I mean, it was 41 grams over 51 meters. That's quite a hole, but you can see all throughout there, there's some really good, 25 grams over 4.8 and 22 over 3.8 and things like that. The nice thing about the footwall zone from what we can see, and so right now we determined it's sort of in between 14 and 1700 meters. It's open going down, it's open going up. So if we're able to find the footwall zone further up, we'll definitely get immediate benefit from that. From a mining perspective, we're already doing the ramp. We're doing all the sills and the sublevel accesses to access the existing A zones, which are part of the pre-feasibility. But to go another 50 meters laterally and get a whole new zone that sort of looks and smells like the A zones, that's pretty exciting. So we really look forward to that. And we continue to drill it. And this coming year, we're developing a platform which will give us much better access to drill this. So look forward to that. Just really I'd say the upside at both properties. So you can see on the left-hand side here, excess mill capacity. So Eagle River is permitted to 1,200 tons per day. We'd love to challenge that right now, getting up to 850 tons per day in terms of our mining rate at Eagle underground. And over to Kiena, Kiena, we could go up to 2,000 tons a day. They did have it turned up with a cone crusher at the front of the mill. However, right now we're in around 850 tons per day, again, based on the pre-feasibility. And we are, looking forward to seeing, exactly when we have more details about the footwall zone, what that could offer up in terms of added capacity. Eagle River, I can't say enough about Eagle River. I think that even within the diorite, as you know, the zones here are very, narrow, but very deep-seated. So it's a little bit like a needle in the haystack, but we've found a few needles here, so I'm confident we'll continue on. But I think what we really like right now is the contact of the volcanics and the diorite. I think that's a great area, and along the volcanics. Just as I'm looking at the Kiena project, you can see here the faults that I mentioned before. So you've got the Norbenite fault and the Marbenite fault. And really, this is the corridor which is, holds the A zone. And the A zone is a sort of a classic Rydell shear that goes between those two faults. And quite frankly, Rydell shears don't exist by themselves. There's probably a series of them, whether they're mineralized or not. I don't know, but I guess we'll have to determine that. That would be a very good, I'd say, successful exploration if we could find another A zone. So really, that concludes my part of the presentation. I'm happy to take questions and see what we can do.
Fantastic, Duncan. Thank you for a great tour through where the company is at the moment and a look ahead. It's been an interesting year, to say the least. So as we hit the holiday season, it's a perfect timing for a conference such as this, where our investors get a chance to connect with you directly. So it's been quite busy in the Q&A column. So I'm just going to jump to the business here. Robert asks us here, Duncan, could you talk a little bit about the possibility of starting of dividends in order to increase investor demand for company interest?
Yeah, absolutely. I mean, as we get the Kiena operation established, and I would say that, I think that's going to be a fork in the road in 2023, perhaps. Mm-hmm. Really, we still have a period of investment to take care of. We still believe in the exploration. Frankly, organic growth pays back also, so we have to ensure that continues. So, but no, we're definitely not against that. I think we're pro returning capital to shareholders. Okay. So.
Great. Thank you for that very much, Duncan. Question here from Barry, and I want to just comment, of course, on the Chief Operating Officer, Marc-Andre Pelletier, resigning, leaving, I understand, January 15th of 22 to take a senior role elsewhere, but that he had a key role in reopening the Kiena mine. The question comes from Barry, how is the search for a new COO going, Duncan?
Yeah, it's just getting going, really, Mark. I'd say that now we're pretty confident. Big shoes to fill, no doubt. I mean, Marc-Andre and I have worked together off and on for about 13 years now. So one guy's thinking something, the other guy knows it, sort of thing. So it's that's definitely going to be hard to replace. But now we wish him well. I think he's taken a CEO role, and I think that that's a perfect evolution, for Mark. No, we're not really fussed about replacing him right now. I mean, quality candidates are certainly around, and I think we're an attractive platform too for somebody to come to. Right? I mean, we're really in a growth phase here at Wesdome, so I think we can provide a lot of opportunity also.
Great. Pleasure to know that that sort of impact from Marc-Andre. And to that note, to honor what you've done at the company, being that you're 100% funded for the restart of the Kiena mine, does that leave room, Duncan, for other tools in the capital allocation kit to create the best shareholder value?
Yeah, good question. I mean, so we've got 2 undercapacitized mills, and we look around for satellite deposits, and we still continue to look around. I'd have to say we're pretty picky. We're not looking for a 1 gram open pit. We're definitely looking for, probably, I would imagine it would be underground. It doesn't have to be underground. We're happy to mine ore wherever it is, but it would definitely have to be higher grade material in order to be additive to the Wesdome story. I think that's important.
Very good. Thank you for that. And let's a bit of a bird's eye view here, no pun intended. Once Eagle and Kiena are both producing at a combined 200,000 to 250,000 ounces per year, would you consider, Duncan, a dividend payment?
Yeah, definitely we would. I mean, there's a couple things to look at. I mean, there's the growth continuation, and there's a dividend, right? And I guess finding the balance on that is really what's going to be key. But yeah, no, we definitely we have a different future than what we had. There's no doubt about it. I mean, we were a 50,000 ounce producer 5 years ago. Now we're onwards and upwards.
Quite an evolution, absolutely.
Yeah.
A question comes in from our viewer John here. Are you looking to expand the company rather and open additional mining locations?
Yeah, perhaps. I mean, we do like the Spoken Hub. I think that's a simple story for us. I mean, we have belief in the Val-d'Or camp. We have belief in the Wawa camp. I think that to have a permitted facility ready to go, you could expand. Obviously, we've got probably no expansion to do at Kiena. I mean, we could probably get that up to 2,000 tons per day with a cone crusher. Over at Eagle River, you could definitely expand it and get more throughput, but it's to find the right the catalyst in order to incent you to do that. So we continue to look around and see what's out there. Other than that, we definitely we like Canada. We love north of the 49th parallel. I would have to say our expertise is more Abitibi based, but we're certainly not anywhere in Canada. We'd be open.
Very good. Thank you for that. Question from JC comes through here, Duncan. Any drill results expected to be released before Christmas time?
Good question. I couldn't say 100%. I know there's a few things coming back in, so I'll hold back on that one. I'm not absolutely sure the timing of that one.
Okay.
It's already the 6th of December, so it's difficult to say there'd be any sort of impactful that people would pay attention to, right? As Christmas comes.
Yeah, as we approach the holidays. Fair enough. Another question from John here, Duncan. Are you looking to expand the company and open additional mining locations?
Yeah, I think we hit that one already. Yeah, no, definitely we're open to that for sure.
My apologies.
Yeah, no problem.
We have many questions flying through here. Question from one of our viewers. How much will you be spending on exploration at both your assets next year?
Yeah, so we haven't published that yet, but I would say that we had some pretty grandiose plans this year, and quite frankly, we've fallen a little bit short just based on lack of drilling capacity. It was really something which affected, I think, everybody in our region. There's just not enough drillers, and so we're trying to augment that back to where it was. So I don't know it would be quite as large as what we thought, but we're definitely north of $20 million, I would say. It's sort of split, 50-50. So we'll see.
Very good. Very good. Thank you for that. Next question comes through. What would you say is the potential addition to the reserves and resources at Eagle this year at the Falcon Zone?
Nah, that'd be premature for me to answer that. I think that we have seen some upside at Falcon, though. There's no doubt about it. We took our first stope out of there in October. It was an enjoyable event, believe me, very high grade and lots to go. I think that there's lots of things to follow up around Falcon, as I mentioned before. So we're really looking forward to that. What would get into reserve resource right now? Not sure totally until the process for us is we cut the drilling off at the end of the year. We then do the resource calculations and the reserves. So really, our reserves are basically done at the end of February. So that would be better. So I'd be speaking out of school if I said much.
Very good. Appreciate that very much. Next question from Robert here, Duncan. Has the company been approached by other mining companies concerning merger and acquisition with the activity?
You know what? I think generally there's been a lot of tire kicking out there in the industry. I mean, obviously consolidation's one of the keys. I think what you're seeing also is there's a flight from shakier jurisdictions. I mean, obviously, I can boast that we're in a tier 1 jurisdiction in Ontario and Quebec, and there's definitely been interest in Wesdome.
Great. Good to hear. Thank you for that. Are you looking for mining locations outside of the Canadian jurisdiction, Duncan?
Not right now. No. I think we're pretty comfortable with really the skill set we have. I think that that it plays well. Canada plays very well to our skill set. I don't think that we're looking for anything else.
I hear focus. Thank you very much for that. Another question. Should we expect to see an increase in recovered grade in Q4 into 2022 with Falcon Zone starting production?
I'm trying to get context on that. So I'm thinking versus Q3, perhaps. Yes, it should be slightly better, I would say. Yeah.
Okay. Another question from Barry. Any grade reconciliations yet, Duncan, on Falcon Zone?
No, it's really brand new. We just mined out our first stope. We just got the CMSs, and so it's. But we look forward to sharing the experience we've had there. So.
Very good. Very good. Thank you for that. Another question from Ryan comes in here, Duncan. Given sizable exploration programs, have you had any challenges yet getting drill rigs and experienced crews? Have you seen an increase in drill costs?
We've had, like everybody else really in the region, like really, I'd say the Abitibi in around Wawa, there's been certainly a big demand, lower supply. So definitely difficult to generate the drill meters that you want to get in order to be successful. We're seeing a bit of a turnaround though, like we're working proactively with our contractors in order to ensure that we do get that. Okay. Of course, COVID always gets in the way here too, right? So it doesn't seem to be going away. So that's another layer of complexity, I would say, that kind of influences us. But and drilling costs generally are going up. I mean, we are in a bit of an inflationary period here. There's no doubt. I mean, CPI in Canada is running probably 4.7% right now, and so it's there's wage pressures. There's a bit of a fractured supply chain, I would say. There's a few challenges. We're not whining, but it's made things just a little more difficult.
Understand. Now, as we do head towards the end of the year here, Duncan, a question from the top. Just wondering about your perspective looking over the next 6, 12, 18 months. What are some of the key turning points or road posts that we should be watching for as investors? Yeah, listen, I think, so far the success of Wesdome really has been, the optimization of existing assets. And so Eagle River, sort of 50 to 100,000 ounces. And, we still see growth there. And how do you get growth? Well, we can do things smarter and we can do some good exploration. And I think that we're able to, I think we've really demonstrated that that's quite possible there. Kiena, it's a brand new world here. Like it's very, excited about undertaking on the PFS. I mean, as it is,
We think that the upside at Kiena with the footwall zone is huge. The exploration effort is not over by a long shot here at Kiena. There's so much to look at, so many existing resources to tap into. So we've definitely have the platform there. I mean, we've got a mill which is expandable. We've got infrastructure which is in good shape. So we're really excited about our future. There's no doubt about it. So we're in two great camps, and I think the exploration and the optimization continues.
Great to hear that. Thank you. Curious about the team behind the brand. Obviously, we've spoken about Marc-Andre, and that's a natural evolution in any company. But who are some of the other top players you have with you, Duncan, that you can speak to at this point that are helping to move the company forward?
Wow, you're really setting me up for failure. I'm gonna forget to mention somebody, and I'm gonna be hated. But no, hey, listen, it's a good team. It's a small shop, as I would say, but definitely. I mean, our vice president of exploration, like me, shows a key guy. You know, our CFO Scott Gilbert, our chief governance officer Heather Laxton, and our HR vice president Stacy Kimmett, and our VP of IR, who set all this up for us here today, Lindsay Dunlop.
Yes,
all key people, and I think the expectations and our own expectations change. I mean, we really do have, I'd say, a bigger ESG focus. Joanna Miller, as our director of sustainability, doing a wonderful job and ensuring that we get everything done. So, additionally, we do now have a corporate development function. Raj Gill, who came over from Kinross, and so. He's making sure that we're aware of all the players in the area and what's around. So definitely. So if I forgot anybody, I'd like to apologize in advance.
Good general cover, Duncan.
Yes.
That. We do have a clever question here from Mark asking, with Eagle Concession regional exploration being on the back burner for a while, are there any plans to explore the Mishi trend?
Nothing immediate. I don't think. No, I think 2022 is not that. I think we're on the south end of the belt right now. It's not that there isn't, mineralization up at Mishi, but really, it's been smaller, low grade pits. Really, query economical, if you ask me. And so I think the best bang for our buck is on the south end on those shear zones. I think that really just makes sense.
Very good. Duncan, thank you for that. I think at this point we've covered most points in the question column. I just always like to open the door at the end towards the top of the hour as we wrap up our session. Is there anything we haven't touched on or additional information that comes to mind for you to share with our audience today?
No, I think really, it's really evolution for us. I think it's a simple story. Mm-hmm. You really have to focus in on the operations and the exploration. I think it's in order to do it. And I think that we've got the right addresses. So I'd say stay tuned to Wesdome. Bigger and better things to come for sure.
Well, I appreciate that very much. Well, Duncan, I'll take this time to say thank you for being with us today. It's always great to hear from the inside perspective at Wesdome. And we'll look forward to following the company as we do.
Yeah, perfect. Thanks, Mark.
All the best, Duncan, to you. And for our viewers, once again, we'll end this webinar. You'll be directed to a survey. Please provide your feedback. It helps us do a better job next time around. And I want to thank again our wonderful sponsor, Laurentian Bank Securities, for making this happen for our audience and our participants today. Stay tuned towards the top of the hour. We have another great company coming up. I know you'll be pleased with more information coming down the pipeline. So, Duncan, once again, all the best for the holidays, and we'll talk soon.
Yeah, great. Thanks very much.
Thank you.